Paying 10% a year for people who do make less than $10,000 a year is insane. But that's actually not how it's going to break down when people actually file their taxes. And the reason is these are just the tax brackets. These don't include things like your tax deductions and your tax credits. And the most underrated thing that people are missing here is the amount of tax credits you get, especially if you're low income with the earned income tax credit, and if you have children with the child tax credit. So if you look at the latest data here from the Tax Foundation, you can see it right there. I highlighted the box for the bottom 50% of taxpayers in the United States. There are 76 million taxpayers, and these are people that earned $46,637 or less per year. And the average amount of taxes that they paid if you made $46,000 or less was just $667, and you can see it over there. And the reason for that is all the tax credits. So these are the earned income tax credits, the child tax credits. There might be other tax credits you qualify for. So you can see that 76 million taxpayers in the United States there paid just average of $667 in total in taxes last year. You can compare that with all the other different ones. So you can see the income split point there on the bottom of that table. That is the average income to qualify into that bracket. So you want to be top 1% there, you got to make at least $682,000 a year. And then you can go up and see on the average of how much taxes the top 1% paid last year. You can see the top 5%, top 10%, top 25%. But yeah, it would be crazy if you made $10,000 and you had to pay 10%. But mathematically, that's just not what happens.